And welcome to an episode of Bitcoin Scaling. This is Jimmy Song with Tone Vase. We're getting a live look at Bitcoin Cash's difficulty adjustments set to happen in about 10 blocks or so. All right, so whoops, echo. Getting a live look at Jimmy Song with Bitcoin Cash's difficulty adjustments set to happen in about 10 blocks or so. This is two different ones. Sorry about that. My bad. Anyway, yeah, we're getting a live look. Let's take a look at what's going on. We are at block 481812. We are scheduled for an increase in 481824. So we got 12 blocks left right now. You can see there that there's a lot of different miners that are mining this right now. F2 pool via BTC, bad pool, Bitcoin.com, and pool BTC.top. I think and a couple of unknowns in there as well. But it's a lot of different miners, but they are currently mining Bitcoin Cash. Difficulty is going to go up significantly. I also have this chart over here. This is fork.lol, which has been doing a very good job of sort of showing the various profitability and things like that, and TX fees, hash rate. You can see right here that we are currently at around 44% of Bitcoin Cash is 44% of all SHA-256 hash rate, and Bitcoin has 57%, something like that. So yeah, this is all very interesting. You can take a look at the current Bitcoin price is 4,100 according to Bitfinex, and I'll let Tone take over from here with regard to price. It seems to have recovered, no, Tone? Tone, are you there with us?
Sure. Can you hear you?
You're coming in very faint. Can you speak into the mic again?
I am. I'm trying. I'm like in some some weird building all the way in the city. The phone reception here isn't great. It looks like a very old building. You were sharing screen, right, Jimmy? Because on my end, I couldn't really see anything on your share screen.
Yeah, I was sharing the screen. Yes.
All right, cool. Yeah, so if you can hear me okay, I'll just briefly comment on the price. Looks like Bitcoin is rebounding quite nicely right now, and it makes perfect sense that people are anticipating this monster difficulty adjustment coming in for Bcash. So in anticipation that the blocks aren't going to be mined as often in about, 20 minutes? People are trying to get rid of their Bitcoin Cash because they might lose a lot of miners. And I don't know what the FUD machine is doing right now over on RBTC, but look at how great their blockchain is and how all their miners are on it. And I want to see how that narrative is going to change once all those miners leave, because give a shit about Bitcoin Cash. They just want money. And granted, that's how all blockchains generally work. You want to use the greed of the miners, against each other in order to provide security for the network and give it like the longest chain. But when it's all said and done, like there is no crypto if the miners are just hopping from one to another. This is a temporary phase. Granted, it has, lasted longer and is way more valuable than I ever thought it could be, but this is not sustainable. There is nothing in Bcash that's long-term sustainable. And let's see what happens when the New York agreement comes around. This is just another example of how these big blockers, they don't liars. They don't stick to their word. At the least they could have done is waited and worked together with each other. New York agreement, they didn't even wait a single day. They immediately forked for their own personal benefit. Anyone that was supporting Bcash to me is a liar, and I don't respect anyone that was supporting Bcash, nor anyone that still does. And I don't think I will ever respect them at any point in the future in the blockchain space. I mean, those people, I mean, what this was, this blatant attack on Bitcoin, like it's not forgivable in the book. We'll see how many other Bitcoiners feel the same.
Well, Tone, so one thing that I'm noticing is that a lot of these pools have opened up sort of the option to mine on Bitcoin Cash if they want to. These may be, a lot of these people that are mining Bitcoin Cash right now may be sort of owners of mining equipment that are, you know, all over the world, like in Venezuela or something, that are just doing this and getting the Bitcoin Cash, selling them and getting Bitcoin. Do you really feel that way about those people too, or is this just more the pools that you're talking about?
Well, no, it's more of the people that are...
Tone, you're not coming in very loudly.
Oh, it's more of the people that are actively promoting it as better, right? Like people always say, oh, you hate all of the altcoin traders. And my answer is no, I don't, right? If you are a good trader and you have the opportunity to trade the altcoins and you can trade the altcoins profitably, I don't have a problem with those people at all. My problem is with people that are either too dumb to realize, or they understand, but they're just, you know, doing it for personal benefit. Like they're not just profiting from trading something like Dash. They actively push the narrative that Dash is better than Bitcoin, trying to sucker in long-term investors and not other traders. So trading something you know is bullshit, fine. If the market is giving you the opportunity to do it, that's fine. If some pool is giving you the opportunity to do it, that's fine. Remember, I was the one that was very critical of Coinbase and Poloniex when they said they weren't going to give people their Bcash. I was the one critical of Coinbase, and I said that is wrong. Coinbase should have given people their Bcash immediately, and I told them they were going to get into hot water for not doing that. Like I want people to be like free to trade this stuff or do with this stuff what they want. I thought it was very wrong for Coinbase not to give people their Bcash. What I don't like is somebody pushing the narrative and trying to convince those same people in Venezuela that Bitcoin Cash is something that's better than Bitcoin, or the narrative from seems like what's coming out of South Korea, that they're trying to convince people that Bcash is the real Bitcoin, suckering these people in only to, you know, have them lose value. That's what I don't like. So if someone is, you know, if someone understands the situation and they have the option to like mine Bcash and profit from it, that's fine. It's just the narrative that whether people are just too dumb to understand what Bcash is, or they understand it but they still, you know, just try to scam other people in order for them to make money.
Well, I'd like to, first of all, thank our over 600 viewers right now. Please give us a thumbs up and a share so more people can see this content. We are also at block 481816, which is about 8 blocks away. So we'll definitely be watching this very closely. We don't have very much time until the switch happens, and it will be very interesting to see when block 481824 happens, because that's exactly at the time that's the first block with the new difficulty. So we are also joined by Thomas Hunt, our Mad Bitcoins guru. Thomas, are you there with us? He's still getting set up, so we'll wait for him a little bit. But in the meantime, let's see here.
Actually, I'm with you, but
I'm here, but I'm not sure I have any sound. Same as this morning.
I can hear you, Thomas. Can you hear us? Okay, I don't think he can hear us. Okay, well, but anyway, it's good to be with you all today. Obviously,
only on the delay. But I wanted to ask Jimmy, what about the longest chain? Does that mean anything?
I don't think it really means that much, because the difficulty on Bitcoin Cash is 7% what it is of Bitcoin at this moment. So really, about 14 of the blocks on Bitcoin Cash are worth 1 block in terms of security on Bitcoin. So from that perspective, the security, given the security of Bitcoin, Bitcoin is in that sense a more secure chain because it's got more proof of work on it. But I mean, it's just sort of a nice number to be able to brag about for Bitcoin Cash. I did predict that it was possible that Bitcoin Cash would get to this block. Block 481824 happens to also be the block on Bitcoin where we will activate SegWit. So that block number kind of has some significance in more ways than one. But yeah, we're obviously watching, and they'll get there first. But that's okay. It doesn't really mean that much other than this giant big difficulty increase that's about to happen. I think we're expecting it to quadruple, so 28% or 35%. I forget which one. I'd have to go check the code. But that would be fairly significant. And we are still at block 481817. One thing I wanted to point out is that the Bitcoin blockchain has been rather slow the last couple of days. We're getting maybe 20 or 30-minute blocks instead of the normal 10. And if you look at the fork.lol graph here, you can see that about 42–43% of the hashing power has gone over to Bitcoin Cash. I think back here it was something like 4 or 5%, and then it increased precipitously in the last few days as miners were chasing that extra gain. But yeah, I can't imagine this staying this high as soon as we hit block 481824. Tone, can you speak into the mic?
Yeah. Hey, Jimmy. So here's like a general question. It's not a question to you, but it's like a general unanswerable question. If big blocks, if Bitmain wanted big blocks and hated SegWit, and Bcash is so much more profitable, why hasn't Bitmain moved all of their miners over yet and continues to mine empty blocks on Bitcoin? I don't fucking want them on Bitcoin at this point. I wish Bitmain moved every one of their personal miners onto Bcash and get the hell out. Why haven't they done us all a favor and moved over to something they clearly support publicly, but not with their hash rate?
It's a great question. I mean, some people think that they were the unknown miners, so in that case, they would have at least put a significant amount of hashing power onto Bitcoin Cash. Obviously, a lot of different miners have come in the last few days, chasing sort of the arbitrage gains here. But yeah, it'd be difficult to see what their end game was, given what they're doing. Something to note here is that they seem no, I thought they went down a little bit, but it looks like they're still at 43%. But yeah, it's hard to. It seems like your view, Tone, is that Bitmain should really move over to Bitcoin Cash. Though I did hear from Jihan that he considers Bitcoin Cash very different than Bitcoin. What are your thoughts on Jihan's perspective?
I haven't had a chance. Can you just elaborate some more on Jihan's perspective? I'm not exactly, I mean, like everything that comes out of that camp is such doublespeak. It's like they want something and they don't want something at the same time. Mm. And not only that, they say one thing and do another. So I have no clue what that side wants. I have no clue why that side does what it does. It's just completely insane to me. And I just don't understand what they're doing. And at this point, I can't rationalize it. And I don't even want to think about trying to rationalize it because it makes no sense. So if you can try to clear up what you think his perspective is, I can try and comment on it, but it will probably be a waste of both of our time.
Well, just so our viewers know, he said something to the effect of Bitcoin Cash is not Bitcoin, just like America is not England. So that was sort of his perspective on it. He really thinks that Bitcoin is Bitcoin, and I'm presuming that he's looking forward to SegWit 2x as the Bitcoin once that hard fork happens. So I'm not entirely sure what he's thinking, but that is a tweet that he sent out earlier. Thomas, are you with us again?
I am, but I have to get some headphones. I can proudly announce I've worked around the Google problem. It was a profile issue.
Oh, interesting. So they screwed up your profile somehow, huh?
Most definitely. Something was wrong with the profiles. I switched to another one, and I'm back in business.
We are now at block 481822. We are 2 blocks away from seeing if well, really, we have one more block at this difficulty, and the second block will then be a much more difficult block. So this should be very interesting. If you look at the 2 pie graphs here, this is Bitcoin Cash blocks last 1,000 versus the last 144. It's very, very clear that BTC.top and F2 pool came in a big way. And given the competition, this is even more. I'm gonna guess that BTC.top put a significant amount of their mining equipment on here for this arbitrage play. What other thoughts do you have on where the price is going, Tone? I know you don't have your screen share with you, but what do you make of the current Bitcoin price and how it's going to go?
I understand. I hear Thomas just fine, but like you're really breaking up on my end. But I think you mentioned what I think about the price. Look, the price is a really weird dynamic right now.
We are having some trouble hearing you, Tone. It looks like I think the last thing I heard was we are having a very weird dynamic. Yeah, I think we're breaking up here with Tone. All right,
it's so
Thomas.
fun having all these technical difficulties. It just makes things better, I think.
Yeah, it is. It definitely is. Let's take a look at the latest. Let's see. Yeah, so we officially mined the last block at this difficulty. The next block should be significantly harder. Let me go over to Blockdozer so we can for the newest block. And we have the newest one, and let's see. That is the new difficulty 272-888-550038. We can compare it to the last block, which was 6822-137-509. So that implies about a 4x difficulty. So it's gone up 300%. So it should be about 28%. Okay, yeah. So Bitcoin Cash blockchain is currently operating at 30% of the original chain's difficulty. It is currently 140% more profitable to mine on the original chain. So it should be very interesting to see how many miners move over now that Bitcoin is now officially 140% more profitable. So will anyone be mining Bitcoin Cash? That is the question. Are there enough miners that are, I guess, ideologically supporting Bitcoin Cash, as opposed to those that were going for the profit? What are your thoughts, Thomas? What do you think is going to happen?
I don't know what to think. This whole thing's been so crazy. It started out, a lot of people had no faith in Bcash. Now a lot of people have faith in Bcash. A lot of people think that it's just going to swing back and forth, though. How are we going to stand these swings, Jimmy? How are we going to relax and accept it?
Yeah, I'm not sure, because there's a very clear attack on having 2 chains with the same proof of work that that miners can go back and forth on, and that's the chain hopping attack. If you take something like half of the miners and put them on whichever chain is more profitable, what you end up having on both chains is just sort of the sine wave of difficulty, where it gets very easy and then very hard and then very easy again and then very hard again. It can be a very, very difficult thing to figure out how to handle. So we're kind of in this weird state, and it's not entirely clear what the end game is. I don't think there is a necessarily stable hash rate that both can sort of equalize at, just because of the difficulty adjustments that are expected to happen. But yeah, I mean, Bitcoin Cash has this extra downward difficulty adjustment that happens if you find less than 6 blocks in a 12-hour period. And I imagine if miners were on the other chain were smart and didn't want people to go over, you would purposefully mine at least that much so that short difficulty adjustment period. But then again, who knows? This is a very complex game, and it's hard to figure out the second and third order effects of your move.
Right, so can you guys hear me now? Is this a little better?
Yes.
Okay, because I don't know as well. I closed every application. It seems to help.
It's getting worse again, Tone. We can't hear you again. Maybe find a better internet connection or a 4G or something. I think you're on the phone.
I hear you so much better now than I did 10 minutes ago.
Huh. Well, yeah,
we are hearing a lot of reports of strange issues with YouTube today. I noticed just the other day that they went to a flat design. I know that doesn't affect things, but I get the feeling they're updating things. I recently fixed it by changing profiles. Then I noticed when I plugged in my good microphone, it switched the audio to that. So there's just all kinds of YouTube updates happening, is what it feels like.
Let me try this again. Hopefully people will understand me. So a lot of it, now that the difficulty has swung this way, right? So we had, in the beginning, the difficulty was very hard, and they kept adjusting, to make it easier and easier and easier until it became more profitable to mine Bcash, and that pushed, a lot of demand for Bcash. Now, we're about to see it swing in the opposite direction for the first time. So we don't really know what to expect. Now, what we had now is the Bitcoin Bcash price opened, and it made a low at about $200, and it fell to about 0.06 Bitcoin, right? So it was so it was about 6% as valuable as Bitcoin. Then on the swing up, as Bcash was becoming more profitable to mine, it swung all the way up to about 20% of the price of Bitcoin, and as high as like 25% on some short-term rare occasions. We are now seeing the downward swing for the first time, and this is going to be important. How far of dollars in terms of Bitcoin? If we swing to 6.
You're not coming in very clearly anymore. You were good there for about 1 minute, but then it's unfortunately gone down. I do want to note that Cash has mined an extra block on top of block 481824. They are now at block 481825. So I guess some mining equipment hasn't switched over yet, and there's enough there that they were able to find the block in 5 minutes, which indicates that a significant portion of the miners that were on there before are still on Bitcoin Cash. So, I mean, mining software and updates and things like that can take a while, especially since these miners aren't used to switching between chains, unlike, a lot of script miners and things like that. So this may be, just sort of a software issue.
All right, Jimmy, can we do an update for people that might just be joining us right now? I noticed the price of Bitcoin is 4105. So it doesn't seem like a flash crash or a panic, but what's going on with the miners?
Well, so the miners have mined Bitcoin Cash because it was significantly more profitable than Bitcoin. 2016 blocks is supposed to take about 2 weeks if you average about a 10-minute block. They managed to go through it in something like 3.5 days, and that triggered a 4x increase in difficulty. So the Bitcoin Cash chain is right now about 30% of the difficulty of Bitcoin itself. And given the price, it is now about 140% more profitable to mine on Bitcoin instead of Bitcoin Cash. And that's kind of where we are standing. Richard is joining us.
Hopefully soon, but I think he's setting up. So
okay.
if they're producing an enormous amount of blocks, what's happening with this Bcash? Do we think that the miners are going to dump it? Are they going to hold it?
Well, I imagine most of the people that are mining on Bitcoin Cash are doing it for the profit motive. It's if you have a certain amount of mining power, it's a lot better right now to go and, or it was at least until block 481824, to mine on Bitcoin Cash and just sort of cash out. And a lot of these miners may be converting the Bitcoin Cash to Bitcoin, for example, and that would make it sort of an arbitrage play, if you will. But now that Bitcoin is more profitable, really we're watching to see how many of these miners will be switching back over. And this is something that we haven't really seen before, because we never really had a coin that was this liquid with this much hashing power, and miners with the ability to hop back and forth. And this is the first time we've really had this sort of situation in Bitcoin. I think it's happened in other altcoins, and there's all sorts of software to figure out which chain is the most profitable to mine, and there's software to figure out which one to mine, and they'll go do it at the pool level. But yeah, that's kind of where we are right now. I see that Richard has set up, Thomas. So
yeah, we're joined by Richard.
Hey,
How's it going, Richard?
It's going all right. This BCH stuff's fun to watch, right?
Hey, since my connection isn't great, I'm gonna cut out and I'll let you guys talk about it with Richard.
All right, it sounds good. Well, yeah, it's certainly not boring around here, is it, Richard?
No. So my position on BCH is that this was warned to us by Eric Paul. We had this conversation. They're going to pump the price. They're going to try and steal miners over by getting them to hot pools. Then it's going to be more profitable for them to stay on that pool. Then the transaction backlog is going to occur. Mempool is going to fill up. Fees are going to go up. And it's going to be their chance to make BCH the new real Bitcoin, right? And I tweeted about it. Harry Paul tweeted about it. Litecoin dude Charlie Lee tweeted about it. He said, look, we've seen this before in Namecoin. I predict there's going to be a block a minute until they hard fork to fix it. His tweet was right. All of our tweets were right. The price pump happened. The block bad things happened. The block a minute's happening. And now the question is, they've already took, when I started tweeting about this, they were at 33%. I mean, if we look at fork.lol right now, which, by the way, they tweeted about fork.lol, and Gavin Anderson said, hey, you know what? It's going to be real interesting to see what happens on fork.lol, right? And everybody on their team kind of knew what was going on. Like they knew that this was going to be their play. And the same guys that put in the work to create the fork, that promoted the fork, that run forums full of people doing nothing but talk about the fork and demonizing the non-fork, they're running with it and they're doing their best. And, yesterday the price was down 7-8%. And now the price is back up, which I'm happy to see, but that doesn't mean it can't drop again. These guys are making their move now. They want to replace Bitcoin. They hate all of the people that have done the best technical work that the planet's ever seen, with 99.9% uptime from core for as long as that's been going on. Now, I hope they fail. I don't like the way this was done. I don't like the miners that are doing it. I don't like the developers that are doing it. I don't like the way that they've approached this. If you want to create your own coin, go ahead. But you don't have to poison other people, right? This is the equivalent of someone going to your company and saying, hey, we're going to destroy your company, but we're giving all your shareholders shares in our new company. So, feel good about that because you got a couple shares, and watch us burn what you work to create. It's unethical. It's unfair. It should be socially punished. And hopefully it won't work, right? So right now they're burning a lot of holders' cash. They're burning holders' cash on both sides. They're reducing the power of the Bitcoin network, making it easier to attack by reducing hash rate, and paying miners 10 times the rewards that they deserve for work that doesn't need to be done, rolling 1 or 2 transactions into a block per minute because no one's actually using their network. And that those coins that are being printed, that inflation is coming directly out of the pocket and the equity of all of the holders of that coin. So they're stealing from the holders of BCH to screw over the network of BTC for a vanity coin with bad devs that are obviously bad devs, which is why they have a block a minute. And they warned us they would do it, and now they're doing it. It's never happened before in Bitcoin. I mean, the hash rate currently is they're almost at parity, right? Bitcoin has 4.26 exahash, and BCH had 3.28. So they're what, half of an exahash trade away, right? Because if one half switches over, that raises theirs by half, lowers ours by half, equalizes that 1 point difference. So they're literally 0.5 of an exahash away from parity, and they've got an emergency read down target, which will allow them to survive more easily in a miners keep hopping off environment. If miners hop off in Bitcoin, we've got to wait 2016 blocks. It's going to slow down a lot. If miners leave their crap pool, which they should and probably will if they want to keep gaming the emergency read down target system, you know, they can keep overpaying these block rewards to keep getting the miners to go over there. Now, the miners that are switching over are being pretty short-sighted, because if you screw over Bitcoin to go make some BCH, what happens when you've burnt through all those free BCH and you need to come back home and that house is on fire, right? If you can get half the miners from Bitcoin with a stupid pump and dump altcoin, imagine what you could do if you're a government like China, right? If you can get half of the Bitcoins through a pump and dump alts coin, imagine what you could do if you were China and decided to just start turning power off or putting people in prison. This is the result of centralization. Mining, protecting us from evil, only works if the miners are decentralized, not only in equipment and location, but also in ethics. And if everyone can be easily moved by a single joke meme of, hey, free coins, it's a terrible existential risk to all blockchains that use proof of work, particularly Bitcoin.
And what about the demand? Where's the demand for this BCH coming? I've heard that South Korea, and I watched an expert from Korea on a video, and he talked about it. He said that they believe in Bcash, and I don't know why.
From what I've heard, it's kind of like the pump that you see on various altcoins when they're first listed on Poloniex or Bittrex or you know, some other website. You know, that this used to happen a lot more back in like 2013 when BTCE would list like Peercoin or something like that, and it would have a giant pump because there was a new market that was sort of getting at it. Same thing happened with Bitsum. That's one of the in Korea. I think it's the biggest one. But they actually started listing Bitcoin Cash maybe you know, and that's kind of what got the pump on Bitcoin Cash going. Same thing happened with Monero a couple days ago, or I think it was actually yesterday, where
I think it's happening now with Ripple. Ripple is up 40%, and they say it's because of South Korean buying.
Yeah, there's a lot of wealth there, from what I understand, and that may be the case. And that it's interesting because the interplay of price and mining power is a significant part of it. When you have you know, a coin that pumps, that makes it more attractive for a miner. It's interesting, Richard, because what you said was this is sort of like an ethical thing. Well, for a miner, if you own a mining equipment, it's in your interest to sort of make back your money so you can have profit as soon as possible, especially for somebody like in Venezuela or something that's sort of relying on the miner to get them like household goods or whatever goods and services that they really need from Amazon and having them shipped over to. They need as much cash as possible, and this is how they're doing it. I don't know if you can really, I mean, can you really blame them for mining the thing that's going to get them the most money when they're sort of relying on the money that they're getting through their miner for sort of and services?
Yes, I can blame them, and I do blame them, because that thing that you've described, it's not where this volume comes from, right? the number of transactions that actually go out to kumbaya help the world survive is like 0.00001% of the transaction volume. And the number of miners that are kumbaya, I'm saving my family, I need this to survive, is 0.00001 of the hash rate, which is why you probably haven't spoken to a miner on Twitter, because they don't speak English or Spanish. They speak Chinese and they don't care about what you have to say, which is why you've never seen them on Twitter. You've never seen them on Reddit. Every single one of these conversations we have about miners never has a miner involved, because they're not like you, right? They don't speak the language you speak. They don't live where you live. They have no interest in talking to you about sports or cuisine, and they'll never meet you. And it's a really big problem. So a consensus system requires more than just technical consensus. It requires liquidity consensus, which is, it has to have a market price, right? There was a time when Bitcoin had no market price. There was a time when it hadn't purchased a pizza yet. It was technically great. It technically did everything fine, but it was entirely useless as a currency because no one had primed the pump of liquidity, right? So that same pump that was primed back in 2010 with a pizza is to some degree being deprimed by inability to communicate and miners that chase whatever nickel is available. And furthermore, even if I ignore all of the like kumbaya, let's all hug each other, do the right stuff crap, it's in their best interest to maintain the profitability of their mining equipment that can only mine SHA-256. And if you switch coins and harm the original coin that you know you're going to have to go back to, the coin that all other coins are priced in, then all you've done is traded some short-term profit for the destruction of long-term profit. And you didn't burn down one house, you burnt down two. So, you know, taking short-term gains at the cost of long-term benefits is, particularly when your SHA-256 mining equipment still has longevity to it, is a terrible monetary decision for those guys. So I hold it against them socially. I hold it against them from the perspective of their own best interest. It's bad for everyone involved. Who is being served by this hash rate defecting to BCH? There's no transactions on their network. It's a power play by a bunch of people who aren't very friendly and don't pay very fair. Who is being helped by that? No one is being helped by that. It is a net loss for everyone involved. And if you've seen Monero or XMR price, maybe those guys are being helped by that. And how does that help a SHA-256 miner? It doesn't.
Well, I would take the other side of that argument in the sense that I don't think you're really necessarily harming Bitcoin that much. I personally think that even if you had a lot of miners defect, and this is sort of, I think Alex Morkos wrote on this a while back, you know, even if you had one block an hour, I think a lot of people that are holding Bitcoin, they're not going to care that much. So what if mining hash power is 1/6 of what it is now? That's okay, because if you're a holder, if you're somebody that's using Bitcoin as a store of value and not necessarily a medium of exchange, and if you're expecting all these like other scaling solutions like Segwit and Lightning and all this other stuff, it's okay. You can still you know, sort of wait on it and harming Bitcoin quite as much as you would think. Or I don't know. What do you think of that argument, Richard?
I'm happy to take the other side of that one. So your statement boils down to hash rate doesn't matter. That's what it means, right? Because if you're okay to see half of your hash rate disappear, which is basically where we're at now, well, then you didn't really need it in the first place, which means we're just wasting money, right? And if you're okay with half of your hash rate disappearing over a good meme, well, then I guess the 51% attack isn't really worth fighting against anyway, because if you can create half the hash rate disappearing for a stupid pump and dump scheme, well, then you can also create it for a good 51% attack that contractually pays out through smart contract all of its participants, like virtually guaranteeing that they get paid to attack the network. So no, I'm not okay with hash rate getting lower. And if the value proposition of Bitcoin is that it is a safer, more secure coin because it has the most devs and it has the most hash rate, well, we need that hash rate to maintain that value proposition. And at some point, if Bcash has the same hash rate and the same software, because they just forked it, and the same liquidity, let me let you in on a secret. You don't have a value proposition any longer. That's it. That's the only thing that differentiates the two. And you could try and regain a benefit by trying to make more software that they didn't adopt, right? And try and make Lightning to work better. But how long does that take? And by the way, these guys don't even speak English. The volume is in a country. You don't speak Korean. I don't speak Korean. Who here speaks Korean? And that's where the volume's from, right? And then Roger could decide to just pump it, dump 10% of his Bitcoin holdings, maintain that price artificially high for 2 months, And then Bitcoin holders can be like, oh, well, you know, we've got the real thing, but we're not as exciting for a pump right now. We're kind of boring. And then who knows what happens, right? Darknet markets, they accepted Monero. They accepted Ethereum. They didn't stay true to Bitcoin. Bitcoin Jesus didn't stay true to Bitcoin. He funded a 20% pre-mined invisible inflating Zcash coin, right? He's on Team BCH. He's on Team B2X, and he was Bitcoin Jesus. So if you can get Bitcoin Jesus on board, and you can get the dark markets on board, and you can fork the core competency of the Bitcoin code, and you can take all the miners, I'm dying to know where the safe and secure digital gold proposition is. I'm very pissed off about this miner thing. I'm not happy to see the miners go.
All right, so a few points regarding that. First of all, you make a good point about, well, what's the hash rate securing? Well, think about what's going to happen with 2x. If a lot of miners go over to 2x on that hard fork, mean that Bitcoin has no value? I don't think so. I think that Bitcoin still has value even if you don't have as much hash rate. I mean, obviously, you're not going to get as much security on the blocks that are currently there, but on the past blocks, they certainly have value because, you know, they have the security of the hash rate from before. That said, you know, the other thing that I think you made a point about how if you have the same hash rate and if you had the same liquidity, then they're basically the same. And I would disagree with that because there's a whole infrastructure around Bitcoin. There's a whole wallet ecosystem. There's an exchange ecosystem. There are payment processors. There are merchants. All of these players and, you know, open source projects, wallets, all these interesting, you know, things that people have built on top of Bitcoin that are for Bitcoin, that aren't for Bitcoin Cash without some modification. Now, granted, you could probably modify it, but the fact that people haven't kind of goes to show you that the network is currently on Bitcoin, and that's the thing. And now, if it moves, maybe at that point we think about some of the differences there. But as far as I'm concerned, the developers, the ecosystem, the infrastructure, that gives Bitcoin a lot of the value. And I would submit to you that a lot of altcoins, the value that they have is in the developers and the quality of the developers that they bring. A lot of coins have died because, or are worth very little because there aren't any developers on those. But Bitcoin certainly has a strong development team, and I think that's the value proposition that Bitcoin brings that Bitcoin Cash.
I think it has the strongest development team, and I spend and will be spending hours defending Core as the best developers in the space and Bitcoin as the most secure coin. And shill as I may, the price still goes down 8% and half the miners disappear, right? And as far as like the security of that first mover advantage and ecosystem advantage, the worst possible case is that a fork of yours does well because it requires the least changes, almost none, right? So to fork Electrum and turn it into Electron Cash took barely any effort. This whole crap coin was launched off of a Wix template website from China and took half of the hash. A Wix template site from China and a fork bad one single wallet took half the volume. That's horrible. That shouldn't be able to happen. And by the way, you guys that didn't dump your BCC BCH coin, you helped fund this to happen. The reason that there's profitability in mining that altcoin and not mining Bitcoin right now is because someone gave you a Trojan horse coin that you decided you'd hold and speculate on. A lot of good excuses, didn't have access to my cold storage, wasn't well educated. Who knew it would happen? Look, I didn't know either. I advise people, look, don't dump when everyone else is dumping. It'll probably overshoot. You'll probably get less for your money than you could have, right? And that seemed like good advice at the time. But now we know that the profit that you left in that Trojan horse coin was used to attack your network, right? So the next time we see a Trojan horse coin handed to you and launched, and you realize where the profit from that is going to be used, it's going to be in paying miners to stop mining for your real coin. It's going to be paid in setting up infrastructure and wallets and exchange relationships to screw over your real coin and compete with it in the most harmful way possible, because you only have to change a little bit of code to work with the new fork, right? If you want to play airdrop coins and you want to get rich on airdrop coins, at least get rich on like Bytecoin and Stellar Lumens, which don't pay to attack your network, okay? If you want to get rich on like other airdropped coins, go ahead and do that. At least they don't pay to steal your miners from you, right? So I would like this to, like, there's two terms I want to trademark, not trademark, but at least popularize. Trojan horse coins, because that's what this was, and dirty fork, right? If you don't want to have replay protection, that's a dirty fork. And you can have forks with it. And here's the sad thing. BCH had replay protection. So imagine what shit show happens with B2X if they don't even have replay protection. How shitty is that? What are we left with? 1/3 of the miners? I'm not very happy. I'm glad the price is up today. I like that.
Well, one thing I would like to ask you about is you keep sort of characterizing this as an attack on Bitcoin. I mean,
what's the difference between turning the power to a miner off and making them work on a different network that's competing against you for liquidity? You'd rather the power just get turned off. It's worse. Like if someone actually attacked the infrastructure and turned the power off, it would be better than having them mine an altcoin you're competing with.
Well, and this has been part of the problem the whole time. This is an open source project, and they're forking it, and they want the name. So they refuse to leave. Richard's right. If you turned off your miner and left, you're not doing damage. But this is like they turned off their miner and started shorting the coin. They're trying to do damage. They're trying to take over. It's a hostile takeover. It's a cabal. It's the ASIC boost. It's the same people that wouldn't interface with us properly while we were trying to have a scaling debate. They don't care about any of the technological improvements that you're going to add with segregated witness. And they're out of control. And it's unfortunate, like Richard said, that the miners are so fly by night that they're looking at one of those pages and the page says, you'll make 2.5% more if you mine this thing. They're not looking at how many days and weeks they can keep making that 2.5%. If you, a lot of people have been talking about the idea that if you kill the golden goose, if you take it apart and try to figure out how it works, you might remove the ability to have golden eggs every few days. It's a bad thing.
Wouldn't it be great if we could meet and speak to a miner and ask him how he feels about this? I would be very happy to hear from a person that is actually of the class that we're concerned with.
We also had a thing earlier this morning where
is in our chat. I don't know if we can invite him or something. But a couple of points that I want to make. First, like we're talking about a hard fork, right? Like and what happened before, and you guys are saying that this is all bad. I mean, if you look at the price on July 30th was in the 2,800 range. We've come up a lot since then. Now, you could argue maybe that the price was suppressed and that it would have risen even more had that not happened. But at least from observing the evidence, it looks like has actually been very good for Bitcoin. And like the fact that we have a competing thing with hashes and all this other stuff, and people being able to dump, and there being a market for Bitcoin Cash that people are buying, that allowing more other people to buy even more Bitcoin. It seems to have done a lot of good, at least from a price standpoint. We're at 4,100. I mean, it's obviously down from the high of 4,400 of a few days ago. But if you compare it to before August 1st, like 3 weeks ago, this seems like a very good thing. I mean, do you like how do you explain that?
Well, here's my problem with that, right? So let's say that we're operating from a position of zero knowledge because we don't own exchanges and we don't have AML KYC information, and we're not looking at volumes, and we don't really know who's moving their share of wealth from BTC to BCH and BCH to BTC or anywhere else, okay? So assuming that we have no knowledge of that, we can state that the people who are most likely to move are the people that are closest to markets because they're the most used to transacting and exchanging. And they've got accounts set up and they've got wallets set up and they know how the systems work. And so if I had to bet, I would bet the people that created this problem are the ones that are profiting from this problem. I don't think they're losing on the deal. And so I wouldn't be surprised if Roger and Jihan and the rest of Let's Screw Everything Up crew made more Bitcoin and more BCH. I wouldn't be surprised if they increased their holdings of both because they had first mover advantage. They had inside knowledge. They know the timing. They know when they're going to pump. They know when they're going to dump. And I wouldn't be surprised if this is an opportunity for them and other intelligent traders to put a serious hurting on holders, just like the miners are. Miners are getting rich right now. They're not losing anything, right? The fees on Bitcoin went up The price of Bitcoin went up, as per you said. Well, they're making more there. I mean, I guess you could divide by the block time to see whether that decrease in block time made up for it. So miners are making more money. People that have first mover advantage and understand trading are making more money. And the only people that are getting screwed are long-term holders that are losing brand awareness to people diluting the brand and the trademark across stupid crap coins, losing security.
Wait. You're saying that long-term holders are losing? Their Bitcoin went up like 30% in the last 3 weeks. How are they losing?
I think
Because
that
of
just
the
might be
timing
from
attacks.
demand. People
No,
just
because of the timing attacks. Because not everyone, look, if you can't take a shit coin that's valued at 0.2 and then value it in your portfolio as 0.2 unless you're able to actually sell it at that. Like way back when BCH blocks weren't occurring, you could have seen it at 0.3 and be like, I'm going to dump at 0.3. And then you would have sent your coins to the exchange. And by the time they finally got there, it was worth 0.15, right? So timing attacks and lag makes it so that certain parties, first movers, pumpers, dumpers, the guys that are responsible for all these things, they use that timing awareness to get in before the pump and get out before the dump. And normal holder, Joe Holder guy that looks at his free BCH and his Bitcoin and assigns them a real value is incorrect and inaccurate. And as soon as he tries to actually transact those things, he discovers, oh, so my Bitcoin went down 100, but my BCH went up 100. I guess I'm flat, right? No, you're not actually flat, because when you decide to sell, you'll find out that the market isn't where you wish it were, right? So every time there's this volatility, this movement, this shakeup of crap, the people that have first mover advantage increase their stakes. So I would not be surprised if the guys with the volume who have buddies at the exchanges who live in Asia that are awake before you are, where all of the volume is, are making money while the holders are sitting and hoping that it all works out. It was the moral responsibility of the holders to punish those people who gave them those Trojan horse coins. We didn't know it then, but we know it now. The next time someone hands you a dead, broken, sick horse and says, here's a gift horse, enjoy, you realize that you're going to have to take it outside and shoot it with 12 gauge. And you dump it, right? So look, I believe in not trading. You're going to lose your money. But I think there needs to be a special case for these Trojan horse coins who are there to attack your network, there with stupid devs that don't know how to program, which is the reason they have a block every minute. And now they want to take some of your equity. They want to take some of your liquidity. They want to take your miners. They want to take your brand. And they want to have Bitcoin's 2x, 3x, 4x, 5x, 6x, 7x. And the only way we can prevent this, because we can't hope that miners act against their own interests, right? Or see long-term. The only way we can prevent this is by dumping the shit coin on site and burning the Trojan horse the minute you see it.
Wow. Quite the rant there.
You should always burn the Trojan horse the moment you see it. Don't mess around.
We're currently trying to get a miner in here, Alex Petrov. Alex, if you're watching, please check your core Slack messages, and hopefully we can get you in here. He's from Bitfury, and since Richard's asking about like talking to a miner, we could certainly use getting his perspective. Yeah, thanks, Charlie, for retweeting us. I'd like to also thank the almost 1,700 viewers that are watching. Please give us a thumbs up and a share. We're obviously watching a lot of the Bitcoin Cash and Bitcoin blocks. It looks like Bitcoin Cash has found something like in the last 40 minutes. So it's getting back to a more normal state. Bitcoin has found about 4 blocks in the last hour, so 15-minute blocks, something like that. We'll have to watch a little more closely to determine how much of the hashing power is actually on Bitcoin, and that's something that we're watching closely.
I can tell you guys when this will stop the attack. So there's 3 states in which this attack stops. 1, BCH price dumps. No more defecting to stupid coin, okay? 2, people stop regaming the downward retargeting system by staying mining it and keeping their difficulty high, instead of having a holiday, waiting for the emergency to drop, and then re-engaging warp mode where they start banging coins out, abusing the system 1 coin per minute with 5 transactions in it, okay? just emptying the block rewards out of the thing. Or 3, they have a hard fork to fix it, as Charlie Lee predicted, which is what they did in Namecoin when this happened in 2011. Those are the only 3 states that I can think of which will cause this attack to stop.
That's another point I wanted to make is a lot of this isn't necessarily driven by the miners. The miners just go to wherever it's profitable. It does seem more to me like it's the market, or at least the Korean retail investors that seem to have pumped this thing. They're the ones that have given Bitcoin Cash value. Now, it's possible that it's being pumped by some, some people that are on the Bitcoin that are, interested in making Bitcoin Cash more. I think that's been something that's been speculated. Alex Petrov has joined the call. Welcome, Alex. Can you hear us?
Yeah, sure.
Oh, okay. How's everything going? How's you're from Bitfury, is that correct?
Yeah, that's correct.
Okay. What have you been doing today with all this drama between Bitcoin and Bitcoin Cash?
I didn't see any dramas. So we are still continuing to mine Bitcoin. They're not mining Bitcoin Cash. They never switch any mining power for Bitcoin Cash. So it was experiment, and I think it's also good for Bitcoin because the most aggressive team, the guys who are thinking they can make Bitcoin better, and they thinking they have the better idea how they can realize it, but I think they are economically and technically wrong on their points. Right now, they are able to run their own project and realize, is it better or is it worse? They can see after time. But economically, I think just increasing the block size, it's not solving any problem. And in long term, it will even increase the transaction fee cost because it's just the economy. If you're running the full nodes, if you have the bigger block size, if you have bigger blockchain, so it's meaning you have bigger CapEx and OpEx to support your network. All full nodes, it's like an infrastructure. So if you have expenses supporting the infrastructure, it requires more money to support the bigger blocks, so the fee will be higher. If you're using this smart optimization like the SegWit, providing more compact block, more compact storage, more efficient network, it's just decreasing the fee. And then you're talking about the miners, they are switching and they are jumping. The miners is long-term investors. It's not so easy just to go buy the ASIC miners. They are manufacturing the chips, and it's a long process. Normally, it's taking over 1 year. And it's meaning the miners in the Bitcoin, they are long-term investors. They're investing money for at least 1 year. Would you like to put your money on risk and jump from one coin to another one coin, decrease the price of Bitcoin, making any risk for a Bitcoin network? I don't think so.
Okay, so it sounds like Bitfury is currently mining. Alex, can you turn off or put on headphones or something, because we're hearing some echo. Okay, so yeah, it does sound like you are currently utilizing just Bitcoin, or you're mining only Bitcoin. It sounds like you are committed to staying on Bitcoin no matter how profitable Bitcoin Cash would get. Why do you think a lot of these other miners are jumping on? We're seeing like BTC.top, Antpool, F2 Pool. Are they only after the profit motive, or are they playing a different sort of long-term game, as you've alluded to?
You're
Alex,
still
you have to
muted
unmute.
Thomas, you got to unmute him.
Yourself.
Sorry, Google doesn't allow us to unmute people. They have to unmute themselves.
Yep.
Go ahead.
Okay. So sure, they can play both games. They can keep the mining power on the Bitcoin, and they can still mine Bitcoin Cash. Once again, I'm thinking Bitcoin Cash is experiment. They experimenting quite a lot in the Bitcoin because they are searching for better solutions. They can also make the mistakes, and all the forks, all the alternative coins, it's our experimental field. So they performing the experiments, and they see if they're successful, if they are able to survive, or if they're not. So this is like education and learning for all of us. We are searching for better compromises. They are searching for better consensus, and they also trying how to improve the consensus and how to make the decision faster, because more users will join for Bitcoin network. It will be more harder to take the new decision, because you should get all the sides on one single site, on one single decision, and take the agreement between all the sides to move forward, to improve technically or to improve economically. That's logical.
Can I make a comment here? So the theory is that big blocks are bad because it makes nodes more expensive. I have a lot of other arguments as to why big blocks are bad, which I've been gathering up for my Roger Ver debate. And I can tell you right now, they don't have big blocks. The average Bitcoin block currently is 1 megabyte. The average Bcash block is 12 kilobytes. 10 times less? No, 100 times less, right? Whatever 1,000 is divided by 11. That's the difference. You go to fork.lol/blocks/size, you can see that because they have a 10x faster than they should rate and no one's using it, they actually have extremely small blocks. So they're not going to run into that problem unless they win. The only way these guys are going to have a big block, actual full blocks problem is if they actually won what they're trying to do. I'm just saying this full blocks won't kill their bad idea. So it'll have to be something else.
Richard, here is one more point. So the price will born only if you have economical turnover. You should have the real businesses who are spending Bitcoins, who are accepting Bitcoins. And if you have real businesses on the infrastructure, so it will be price. If there is no real businesses, it just sell and buy. So it just how we agree about the price. It's more like synthetical cost. The real cost is always made born only if you have a real economy. If you're selling me something, if I'm providing some services, then the price will be higher.
Are you aware of a state which could cause this BCH miner defection problem to stop, separate from the 3 I'm about to list? 1, BCH price dumps, no reason to mine it unless it's a vanity coin for you. 2, they have an emergency hard fork to stop the emergency down targeting, and then it stabilizes at a difficulty that's reasonable, and there's not the 10x block reward for block per minute. Or, yeah, that's it. So price drops, hard fork, or stability makes the emergency down targeting stop, and then you get a block every 10 minutes. Those are the only 3 states that I can think of that will prevent further miner defection. Are you aware of a 4th?
So I think they can even create the real economy, and they can also involve the new businesses on Bitcoin Cash. This is like the 3rd opportunity, and I think it's pretty realistic one. So the people who are thinking Bitcoin Cash, or if they think Bitcoin Cash is more efficient and more affordable and have some pluses for them, they can switch for a Bitcoin Cash, and then the new community will born, and they will create the new economy.
So your 4th thing was that it works, and the miners just stay over there.
Yeah, it may work.
That's not what I was looking for.
I didn't want to provide any prediction. I didn't want to blame anyone. So I'm like pretty accurate on this point. So
I think I have another state, Richard, that I wanna throw out. And that's if the mining reward gets low enough, then they don't mine because the fees aren't high enough and their blocks are so big, and there's no real reason for a miner to mine that, because this is many years from now, obviously, maybe like 8 to 10 years. or 8 to 12 or 16 years or something like that, when there's been multiple halvings and block reward goes down from 12.5 as it is now to something like 0.625 or something, then I think at that point we might see something else. And in that way, I take comfort, because a hard fork can't happen forever, because at some point you need that mining fee in order to keep it going. So having a fee market in Bitcoin as we do, that should help Bitcoin, but not necessarily another chain that doesn't have a fee market like a Bitcoin Cash does.
So let's play a fun thought experiment game. Okay. Now that we know that Trojan horse coins and dirty forks are the menu du jour, that means of the day in a nice non-fancy English. Well, what do we do when the next one comes? What happens when 2x comes along? Do we tell people dump on site? Or do we tell them we're not smart enough to have an answer for you? Good luck. I hope this all works out. Like, I don't think that the world is a better place because the BCH Wix website and single dev took half the miners. I think that makes the world a worse place. I would prefer that if you want half the miners and you want tons of liquidity and you want to have a nice pump to make your money off of, that you do it through good technical advancement, good social advancement, good business development, and not theft of trademarks, theft of code, theft of mind space. I don't think that's the right way to go about getting rich in crypto. So this is going to happen again. And I would like to have a reasonable advice to give people that hopefully is profitable for them. Do we give people a lightning, what is that, lighthouse contract where they time lock funds and say we're all going to dump if we get this amount together? I mean, is that the solution? And then you only dump if it's reasonable to dump? I don't know, but I know that I don't like being attacked from inside. So maybe we could play around with what do we do with the next crap coin that is handed to us?
Yeah, I'm not certain that I agree this was like the most terrible thing in the world, or that it made the world a worse place. If anything, we had a lot of uncertainty removed by having this event go through, because we now know that we can survive a hard fork. We also now know that it's not that bad, and we're as a network, as Bitcoin, the network has been hardened by this, and we now know how to better handle it. SegWit 2x is going to bring another whole can of worms, with especially without having replay protection. I personally don't think it's going to be quite as big a deal as people are making it out to be, but it would be nice to be hardened against that too. And successive forks will do the same thing. I don't know if we can sort of necessarily advise people and have that much influence over it. It's really the market that will decide these things. And as far as I can tell, the market sort of decided, hey, Bitcoin Cash isn't worth as much as Bitcoin, and that if it has value, it has value, doing something else. There's tons of altcoins that are much, much worse, in my opinion, and they still have value. So I'm not surprised at all that Bitcoin Cash continues to have value in some way, shape, or form. And I imagine the 2x hard fork will as well. But in the meantime, I think it's just fine to let the market decide, or let the market sort it out. You don't need to do anything.
I disagree with that, and I'll say why. Okay, I made a YouTube video about why it's important as a smart person to speak truth to stupid and to speak controversial things, because the controversial things are where the profit is. If everyone already agrees on the thing, talking about the agreement doesn't change anyone's behavior. Doesn't make the world a better place. People in chat are saying what libertarians so often say: let the markets figure it out. I don't bother voting. Let's index my decision. Let's let the market figure it out. Let me let you guys in on a secret. The wisdom of crowds only works when the crowd participants aren't aware of how other people are voting. If the crowd participants are aware of how other people are voting, you get the madness of mobs. Only in a system where people individually decide for themselves without being influenced by others, like guessing how many jelly beans are in a jar, does the wisdom of crowds work. And even further, research has been published saying that you can enhance even that outcome by measuring a person's confidence and pure belief in the expertise of that person and do maybe 20% better. Okay. This thing that sucks that exists right now exists because of social lobbying and effort that was done. It was a goddamn Wix website. A Wix template website did this. Okay. And a single dev. You got to be kidding me. So all you guys in chat that are libertarian that think that social networking doesn't work, you're wrong. Okay. And you're pussies because you don't want to come down on a side and maybe be wrong. Okay. But while you're being a pussy, not wanting to be extreme, not wanting to be controversial, not wanting to choose a side, not wanting to give advice because it might be wrong, they're out there taking the risk with their Wix website and getting rich. Okay. And causing harm. Right. So I don't support the libertarian. Someone else will figure it out. Someone else will vote for me. Let the market decide it. I don't support that. I'm smarter than most people. I've got more experience than most people. It's my job to lead, and I'm going to do my best to lead. And I'm not just going to tell you what to do. I'm going to tell you why I think that you should do it. And if you disagree with my premises, then at least you know what premises I'm working with. Maybe you can make a better decision, right? I'll tell you why I feel the way I do, and I'll tell you why, right? I don't want to see another shitcoin do this again because you're always going to lose. Did you dump it 5? Okay, you feel like you lost because you could have dumped it 20. Did you dump it 20? You feel like you lost because like there's these things where it's like the opposite of the Bitcoin goes up, it's good for Bitcoin. Bitcoin goes down, it's good for Bitcoin because cheap coins, right? It's called the framing fallacy. You just keep shifting your frame, so it's always wrong. Well, it's the same way when you get this free coin. Oh, the free coin went up, I shouldn't have sold it. Oh, the free coin went down, I should have sold it. And you just constantly feel bad over it, and I don't see how it makes anyone's life better. If someone can tell me how this is the right way to launch a new technical project, I'm more than happy to hear the evidence for it. But until someone supports to me that this is the right way to launch a technical project, I'm going to try and get these things to stop happening by telling people to dump on site. Because that would have solved this.
Well, that would have certainly helped in making the price go. I'm not sure that would always solve things. And you're of course free to air your opinion, and hopefully people listen to you to do whatever it is that you want them to do. But my personal view is that this is inherent in the design of Bitcoin. Anyone can fork at any time. Some people with you, you can do whatever it is that you want to do, and you can make a fork like Bitcoin Cash. You can make a fork like we're going to do. And you can make all sorts of other forks as well. The key, though, is that in order to do it, you need to bring a bunch of miners and users and developers with you, something that you can offer to the market. And if your offering is substandard, then no one's really going to buy it. But that said, there's such a hype and mania around and altcoins and ICOs and even Bitcoin Cash to a certain degree, that it's very difficult to sort of stop people from buying it, right? And I'm not sure if that would prevent that would cause the price to go to zero. I mean, I guess maybe short of like being arrested by a government or something. Even then, I don't think it goes to zero. It's very, very difficult to do, to like convince an entire economy to do one thing. So, I mean, and that's not to say that you shouldn't go out and say stuff. I believe that because of the network effect, how money works, I mean, it is the ultimate thing in network effects. The market is really the arbiter here, and the market's pretty clear right now that Bitcoin is worth about $4,100, and says more than any of these other arguments.
Well, a few things. Marketing works. That's why we have this thing now. Social consensus and social effort and try-harding and touchy-feely crap, it works. That's why this fork occurred. It's the result of that collectivism, right? It's easy to make fun of collectivism, but boy, is it powerful. It's how we run entire governments, right? We don't need everyone to dump. We just need a strong punch to the face on site to make it so that no one else, like, if you were in a fight against 3 parties, the best thing to do is run. Distance is the best defense. But the next best thing is, if you can't run, to make sure that you don't let them get around you and you keep on the one side so you can attack them one at a time, right? If you punch hard enough in the face, these hackers, these evil, dirty forkers, if you punch them in the face socially, and market-wise hard enough first, it's harder for them to get people to join their side. Nobody wants to get ostracized. So it's much easier to kill a snake when it's small than to kill it later. So I support punching hard first, making sure that people know if you want to do harm to this network, you will pay a price. And when you want to come back, it's going to be harder for you. Okay. And then we have less of these problems in the future. I mean, it's a reason that we have law enforcement, right? Law enforcement works. It doesn't always work great, but it's better than not, right? And when you realize like, oh, your buddy went to prison for a thing, you're slightly less likely to do the thing. When you realize that when you dirty fork and steal brands, steal market awareness, steal names, you should pay a price for that. And we don't need everyone to do it. Look, if Roger Ver can dump a little of his coins and pump the price up, which he may not have, but I don't see why he wouldn't, seeing that he loves this idea. You know, look at all he's got done with that little bit of price pump. And he could have just wash traded it. He could have self-traded, right? Like he admits on public forums, he's down to play the price movement game. Well, he could have just traded the coins with himself, had no real cost, paid a little bit of fees, right? And now we're all talking about this thing, giving it mind share and mind space, which has value on its own, right? To some degree, I'm helping their project by telling you how much I hate it. Such is life, right? Well, I want to see the opposite of that. I want to see someone dump into that crap so hard, have our own hero dump it so hard. Didn't cost you anything. It's free. Dump it and socially ostracize the people that did it, and then watch Bitcoin go sky high, right? I mean, that's the whole game. If the single coin to rule them all doesn't work, why not you buy some other altcoin?
More. They've already been ostracized. Like there's two camps for a reason, all right? Like,
no, but if that were true, all the volume wouldn't be in Korea. The volume would be in other places from people dumping it so hard. No one is dumping this. Half the people in chat are holding this shit, which is why they're talking so much garbage. Half the people in chat were like, hey, maybe I can get rich on this, right? And I was with that. I supported that. I was like, yo, don't dump it when everyone else is. But now we realize what happens. Look, if you're not mad about losing half your hash rate, maybe you'll be mad about losing 90% of it. Then what?
I mean, so here's we come back to this argument, right? Like, does the hash rate matter that much? Because as far as I'm concerned, I have Bitcoins that are worth $4,063.70 right now, according to Bitfinex. If you lost some hash rate, what's the price? I mean, like the honest question. Like, does that really matter if the
if the hash rate doesn't matter, then why don't we just use proof of work and federate, and we'll just have 12 servers per country if hash rate doesn't matter?
I'm not agree. So the Jimmy was right. So, and hashing power working like a protection barrier for whole network. It's protecting whole ecosystem, Bitcoin ecosystem, from the attack from outside. And there is a natural equilibrium in Bitcoin network. There is a free sides, the miners, full nodes, and also businesses, wallet holders, and all economical society who are creating also the cost of a Bitcoin. They are like a free sides who are playing in the poker behind the table. If someone trying to cheat, two other sides will try to force and punish the other side. If you have just two players, like, for example, like proof of a stake, there is only full nodes and only wallets and businesses are two sides. Sooner or later, one side will win and the other side will lose. And the mining is also like a protection barrier. I'm working greatly on this. The miners also will be punished. If the price is decreasing, the miner will lose money. They are trying to just protect their own investment, but they are still need to play following the rules of Bitcoin network. And this creating the beautiful triangle. It's self-equilibrium and it's working perfectly. And by the way, then we are talking about does any hashing power creating an additional coin cost for a Bitcoin network? Yes, it's creating because it directly invested. So the miners investing money, and if you're talking about the market cap, it's absolutely wrong position. Then you're trying just to take amount of the coins and multiply it by a price. the Bitcoin is also infrastructure. If you have an infrastructure, it has a cost. If it has CapEx and it has OpEx, it's also a communication network. If you're talking about the market cap for Facebook or any social network, you're also counting all the users, because users also creating the cost. All users who just open wallet, even if they have 0 Bitcoins on their wallets, they potentially may get Bitcoins, or they will buy Bitcoins, or they are already involved in the system. They are potential customers. And if you're trying to calculate the price for Facebook, you're counting how many users you have, because you can sell something for them, or they can buy something for you, from you. So the same, absolutely the same in the Bitcoin. But if you're talking about the market cap of a Bitcoin, they should calculate everything: all the users, all the wallets, all the businesses, all the developers, because the developers also creating and they also fulfilling and increasing the performance of the Bitcoin network. They moving Bitcoin network forward. More developers you has, more faster Bitcoin network will grow up, because the new businesses will be built on top of a Bitcoin. Will be also Bitcoin improved technically by itself, and mining equipment also part of the market cap of Bitcoin. All together create real cost of a Bitcoin network.
Yeah, I think Alex is right. There's a whole infrastructure that you have to take into account. And though hash rate matters somewhat for like protecting and securing the network, I'm not sure if that's like the be all and end all. Or I think most people would trade double the price for half the hash rate any day.
I agree with most of his arguments, but I believe there's an accounting error. He described, I'm going to try and summarize his arguments in 2 sentences. He says that there's a trilemma that's self-balancing regarding users, miners, and holders. Is that the correct 3 parties?
Yes.
Okay. I believe he said that hash rate does matter. Since he works for a company that makes chips, that seems like the correct thing to say, or else he wouldn't like working there probably. Okay. And then the third thing he said, which I also agree with, is that the market cap that we see on CoinMarketCap isn't the real market cap, because there's a lot of other things that matter that are not the price of the coin. User adoption, security, developer activity, regulatory advantages, jurisdictional advantages, all of these things matter and would be accounted for in a real business valuation, which, by the way, real people that do real business, we don't just talk about market cap. There's whole business values as well, right? There's things much greater in life than market caps. Now, here's the accounting error. So I agree with all that stuff. It's fabulous. The accounting error is you can't say that the mining equipment and SHA-256 hardware counts towards the value of Bitcoin when half of it disappears over a Wix website and goes directly onto the balance sheet of another project. That would be inaccurate accounting, because it would count just as much for their balance sheet as it would for ours.
Why not? So the Bitcoin miners, they performing the necessary work to support all the Bitcoin network. They're processing transactions. The reward, it's only economical stimulation for Bitcoin miners to work on this field. So the miners will continue to mine and process transaction. And by the way, this is a major point and major reason what miners are doing in the network. They're not just collecting the reward. They're performing transaction processing, mining them, and closing the blocks. In result, you're getting the confirmation for all the transactions. And exactly miners processing the blocks, finding the solution, they are locking decision, and they continue blockchain, expanding it and growing it up. So this is the main reason and main goal what the miners are doing in the Bitcoin network.
I agree with all that. The point is that you can't take the cost of mining hardware, say that it's an investment in Bitcoin. Somebody put up a Wix website, and now it's actually an investment in some other thing. That uncertainty of future performance of the investment means that you have to greatly discount it towards any specific project. So in the old days, when there was only one SHA-256 thing worth mining, you could say that part of Bitcoin's actual enterprise value is the money that miners have invested into this equipment, hundreds of millions of dollars, okay? But now that we know that at the drop of a hat, some large portion of that sunk cost and rapidly depreciating chip can switch into another thing, means that we can't account as much of a percentage of the value of that financial investment towards this one SHA-256 coin, and that to some degree we have to account for a Wix website getting set up and stealing some large part of that. Now, that wouldn't affect the real-time hash rate that's measured towards Bitcoin. That stays in that column that's pro-Bitcoin. But whatever hash rate defected, that investment in equipment needs to not go into the Bitcoin camp, because it's not in the Bitcoin camp anymore. It's mining for a competing project. Competing.
Yep. You're absolutely right. It's competing project, and they also stealing the price if they are switching for something else. But it's not like immediately will be impacted on the Bitcoin price. So if miners switching for some other chains, it will not immediately will be like changes on Bitcoin price. But miners are still the part of the infrastructure. If you're talking about the credit card processing, you're always asking how many POS processing points you have, because it's infrastructure. It's meaning how many places you have where you can spend your money. If you have multiple nodes and you have multiple connectivities and you have a lot of infrastructure in different countries, it's also increasing the overall value. It's also increasing the market cap. And the same about the hashing power. But right now, even if the hashing power is decreased like for 20%, the network is still running. They are still they are still able to process necessary amount of transactions in the Bitcoin network. There is no impact. But if you're removing 50%, if you're removing 75%, it will be impact on the price. It will be impact on the price on 2 weeks term or on 1 month term until the difficulty will be adjusted and economy will be also rebalanced.
Why is no one talking about the potential for 51% attacks? I mean, I remember way back when 48% in a pool was like nightmare mode. Now we just lost half the miners. None of them speak English. It's all good. No big deal. It's so weird.
All right, so we have a question from Super Chat that I really want to get to, which is, are tiny blocks good for miners? Because then that would presumably add fees. And I think that's actually kind of correct, which makes this whole big block thing a little bit puzzling, because if you have smaller blocks, then you have more competition for fees, and that should increase it. Although, like, the number, there's some supply-demand curve optimum there that I'm not sure where it is. I have a question for both Alex and Richard. First, Richard, there's another Super Chat question. When's the debate with Roger?
Roger told me that we should try and get it done before the end of this week. So,
okay. Is that going to be on WCN or somewhere else?
I'm the only guy that's set up to stream 4K. So I'm going to stream 4K, probably 25 megabit up speed through YouTube live events. I was going to do it through Twitch as well, but I discovered that they have a 6 megabit cap, which is useless for 4K. And then I'll probably use OBS to screen Roger's stuff, which will probably not be 4K. I'm sure it's super important to see my complexion in 4K. I mean, but I'm a nerd, so I want to do it the best possible, and I have the equipment. So,
okay, great. And Alex, the question I have for you is, I'm getting side channeled by various people that are in the mining business. When is Bitfury going to make their equipment available for them to buy?
Yeah, sure. They are trying to do it all the time, but you should also understand the nature of the mining. So the mining is a very competitive field. So, and it's very aggressive. all the evolution from the CPU, GPU, FPGA, and ASIC is only about the efficiency. The whole evolution from CPU to GPU is about the decreasing the price, operational cost for all the network. It's indirectly decreasing the transaction fee cost in the dollars because you are spending electricity. If you're using CPU, it's consuming a lot of electrical energy. If you're using the GPU, it's consuming less electrical energy. If you're using the ASICs, they are more efficient. If you have more efficient ASIC, it's also decreasing your in-dollar cost for Bitcoin transactions. But then you're manufacturing the equipment, it's a long process. Normally it's taking like 1.5 to 2 years. Because first of all, you should raise the money, you should find the engineers, the engineering team developing the new chips. Normally it's taking almost 1 year since you decide to create a new chip and until you get it in the silicon. So then you're getting the new chips. You need to sell them also as fast as possible and deliver them on the market as fast as possible. It's meaning you should also create all PCB, all design, and make it like end user devices. For Bitfury, just to survive on competitive field, a couple of times we just calculating. They are not having enough time just to create the end user devices because they have a lot of regulation inside EU, inside US. You should certify all the equipment. It also requires a lot of time. Instead, we can sell chips, and our third party can construct their own miners and can install them or provide it for end users. But just to survive on the market, they are able to install the miners in our data centers because it's much simpler and faster. Normally, we're developing chips in like 5-7 months. It's very aggressive. Our team are working like 18 hours per day just to create the chip and just to manufacture them faster. But all the time before it was trying to provide the end user devices, and we are still keeping in mind providing our chips on the next manufacturing point. So it's only question how the third party will be able, how fast the third party will be able to construct the miners and provide them for end users. But once again, all the economy of Bitcoin mining was improving very fast. The Bitcoin is very competitive field because the competition is very high. There is almost no space for like small miners like USB miners. So right now they are almost reached the highest point of the ASICs optimization. Normally then competition are growing very high, so going very high. The competition is also very high, and all the improvements in the ASIC process, they are going very fast. But right now, technically, they're almost reaching the highest point, and there is almost no any like in times efficiency accessible for ASICs. It's a couple of %, and it's meaning the mining will be distributed again. So it's normal economical waves. If you have more efficient mining equipment, it's becoming more centralized. If you're reaching the highest point, then it's like franchise. You can buy chips. It's more available, and it's going again for decentralization. It's just economical rules. It describes it in all books, and it's normal waves. So,
could I try and restate your argument shorter to make sure that everyone, at least I understand it?
Richard, Thomas has a few updates, and then we can get back to this.
Yeah.
Sure. Just like to thank everybody for watching, ask everybody to give us a like and a subscribe. And what we're looking at now is the pools for VIA BTC. We've seen some movement. The BCC pool has dropped under 600 hash rate, and the hash rate is drifting back to the BTC pool. We've also had an update from a miner who says that just this morning, Via BTC launched a BTC BCC automatic switching pool. This could be part of what we're seeing go on right now. This is an update from our viewers. And we've had an update from Twitter that fork.lol has just added inflation to their chart, and BCH is no longer more profitable than BCH because of the incredible inflation rate of the Bcash token. Just a quick update there. Go ahead, Richards.
So I believe that the summary of Alex's statements is that making chips used to be harder than it is now, and there used to be more improvements that you could make to make them more efficient. But now that people have been attacking this problem for a few years, they have reached the limits of technical improvements, and it is starting to become commoditized. And once it is fully commoditized, whereas mining was more centralized due to cost, it can become redistributed again, which would be fabulous. So did I understand that correctly, Alex?
Absolutely. You get exactly the point.
Great.
So can I just add a couple of things? It will describe much better for you to understand the nature of why it happens. So when we manufacturing the ASICs using 55 nanometers, and they switch for 28 nanometers, the efficiency was almost 16 times. Then they are going for 60 nanometers. The efficiency was increasing only 8 times. Right now, if you still continue to going for smaller nanometers, the efficiency will be only 10%.
Is that because you're hitting dark silicon thermal limits?
No, you cannot go even deeper because manufacturing for smaller nanometers require a lot of money. It's much simpler to manufacture the chips using like 60 nanometers or 10 nanometers or 40 nanometers and just print it in huge amount. If you're going for like 9 nanometers, it will cost you just to get the PDK and SDK, and just to design the chip, you will pay tens of millions. And the price of the chips will be very high, but you will gain like 10, 15, maybe 20% on efficiency. This is more
slower too, right? Aren't the higher process nodes slower? Like to make, to design?
Yeah, this is again like optimization. So they go through all possible optimizations, manufacturing the ASIC and improving them. And right now they are almost at the highest point. The next optimization can be only if we are switching for new technologies like optical chips or magnetic chips or chemical chips. I don't know what it will be the next one.
There's still threshold voltage stuff you can do, right, to make more power efficient?
No, it's consuming a lot of electrical energy, but if you're going for very small nanometers, the smallest available, like 7 nanometers, the wires will become so thin what you will not be able to deliver the necessary amount of electrical energy in the chip exactly for SH256 hashing. So there is almost no space how to optimize and make the chip smaller. You can play only mathematical tricks. You can perform like small schematics optimization, but they almost reach the highest limits on the ASICs optimization right now.
Do you think ASUS and other motherboard manufacturers that are mining specific? I know. Go ahead.
Sorry, but no. The chip, 60 nanometer chips, what the Bitfury was manufacturing in 2016, they containing almost 32 million plus transistors on square millimeters. The Intel manufacturing their CPUs, they have almost 25 millions. If you're talking about the NVIDIA, the latest, the Pascal GPUs, what they are manufacturing, They have almost 28 millions, and they are still less what Bitfury has and what Bitmain has. So they even beat the like very long time competitors on the market. The Apple, the Intel, they have less transistors in their equipment because they're using the different schematics. And even if they try to build the miners, I think they will be not so efficient. They doesn't have any understanding how to build them. It's evolution, and they need time to train their engineers. And they also need a couple of spin-ups. It will take 2, 3, 5 years until they will be able to manufacture any efficient ASICs, any competitive ASICs.
Is there a reason we could have prevented Chinese, basically what appears to me to be domination in this industry? I mean, if all the fabs are in the United States and in Taiwan for the most part, how did China ever get to be at such an advantage anyway? I mean, aren't they taping out at TSMC? I mean, where are they taping out?
So the China manufacturing a lot of the electronics, and they sure they have a lot of engineers, they have a lot of resources, they have a lot of already linked and established businesses. They can manufacture chips very fast. But 85% or 80% of all chips are manufactured using the TSMC. It's the biggest manufacturer. The most of the ASIC manufacturing also manufacturing using the TSMC. So
like TSMC is Taiwanese semiconductor company, right?
They're located in Taiwan. So there is also Intel, but they are mostly manufacturing their own chips. There are also the Samsung, there is also NVIDIA, they're using their own lines. But TSMC is taking orders from third sides. And if you like to design any ASIC, so normally you will mostly fit on TSMC, and it's only your engineering team will be able to improve chips or build more efficient chips, but still using the same lines. It mostly on design side. Manufacturing, it's almost TSMC or smaller factories, is depending what side
Global
you're
foundries.
going. Yeah.
Yeah. You can go Wikipedia and look up all the chip fabs. There's not that many of them.
Yeah, it's exactly not so many of them. And it's competitive felt. Why TSMC is manufacturing so efficient? Because they get the better technology, they're providing better price, and there is no reason to choose the smaller one, getting the higher risks, and maybe the quality and the risks will be higher. TSMC is more stable in this case.
So, Alex, what happens when B2X dirty forks and doesn't provide replay protection? I read Jimmy Song's guide on how to protect myself from replay attacks by finding block rewards and somehow including them as part of my transactions.
Yeah,
I've heard of other ways to do it.
A transaction off of those. Actually, there was a super chat question that's related, which is after Bitcoin after SegWit 2x forks, like what do you call Bitcoin? Bitcoin 2x, Bitcoin Cash, like, and say the mining hash power is like 40, 40, 20 or 33, 33, 33.
So
like, how do you decide?
So first of all, the segregated witness 2x, I think it's a very good example how to prevent any forks. So all biggest miners, all biggest businesses just came together and agree. They get the compromise how to avoid any forking. The segregated 2x is not against the existing Bitcoin community. It's just the compromise. The most aggressive sites, like Bitmain, like Roger Ver, like any others, they came together and they take the agreement. They take the compromise, most affordable for all the sites. And right now, the segregated witness 2x is just trying to save the community. They are not talking about the firing Bitcoin Core. The Bitcoin Core is a big community. It's very hard to get any agreement from Bitcoin Core. The GonCon agreement, when it was organized, it's take 21 hours to just get the agreement. It was rewritten multiple times from scratch. But what they get in result, the core team and representative from core team, they doesn't want to sign the agreement because they cannot present all the community. The community is very huge. It's not even the 100 people. It's thousands of people. So it's 400 developers, and they all have their own opinion. It's very hard to get any agreement if you have 3 sides. It's much harder if you have 5 different sides. Can you just take the point, if you have 58 businesses, how hard it's to get the agreement between 58 businesses.
So Alex, I want to push back on that statement a little bit, because the argument that I've always heard from Bitcoin Core developers with regard to the SegWit2x agreement is that there's a very obvious process to get these compromises in, and that's to publish a Bitcoin improvement proposal, let the community sort of comment on it, and if you can convince enough people, including like the 58 businesses that you mentioned, that if they supported it and got enough people on in the core development, GitHub to agree to it, that's how it should have gone. And instead, there was sort of like something that was perceived as sort of a backroom deal, where a bunch of companies and corporate types sort of came together and they made this. What's your response to that? What do you think of that sort of perception of the SegWit2x agreement?
So I think if you would like to get any agreement, first of all, you should get agreement between most aggressive and most opposite sides. And then you can get the agreement between all the other sides. Even Bitcoin Core, they help a lot improving the segregated witness 2x on the first stage. And I think they still can get help in making the segregated witness 2x realistic, or it will be changed, but it again will be consensus between all the sides, because right now businesses agreed what they're going for. The miners, it's not like 10% of the miners, it's over 95% of all miners and biggest businesses, its biggest economy was agreed how they would like to improve and how they would like to save the Bitcoin. Sure, we still need the technical assistance. They still need the engineers. And Bitcoin Core, like a team, they have better expertise how to build and how to improve a Bitcoin. If you'd like to build the rocket, you're always asking the engineers. You're not asking just the regular users how we would like to build the rocket. Would you like to how we are building the rocket, how it should look for, or what engines we should install? They're always asking the engineers. And the core developers, the developers with huge technical expertise, they can provide exactly the solution, and they can provide exactly recommendation. The whole community, the smaller users, they can only about what color we would like to paint the rocket.
Okay, so you
can have any color you like as long as it's black.
Okay, gentlemen, I'm almost out of a battery on my laptop, so I has 8%.
All right,
so,
thank you so much, Alex, for joining us, especially on short notice and based on like a Slack chat on Core Slack and stuff like that. But yeah, it's been very enlightening listening to sort of a miner's perspective on this. And actually, not much has happened, I think, since 481.824. There's been about 7 or 8 blocks on Bitcoin Cash. In the meantime, Bitcoin also has had maybe like 3 or 4 blocks. It looks like a lot of miners may be in the middle of switching. We'll see. Obviously not Alex's, because Bitfury's, I think, been on Bitcoin the entire time. But yeah, I'd like to thank I think almost 1,950 was our top. The number of people that joined us. We're very glad that you could for watching this Bitcoin Cash roller coaster. It does look like Bitcoin price has recovered a little bit as a result, and there's a lot more to come. Obviously, SegWit is activating in a couple days. I'm going to guess that it's going to happen a little faster because Bitcoin Cash's difficulty just quadrupled. So we'll probably be back. I also have a show later tonight with Off Chain with Jimmy Song. That's my new YouTube show, and I have as my special guest Daniel Kraywis, and we're going to talk about hard forks and things like that. So I hope you can join us. Thomas, if you could leave us with sort of a bye-bye. I don't know if you have any other updates that you want to do first, but yeah.
Let's see. Well, I have lots to say. Going back to the miner centralization, I wanted to share an argument that I once heard from a young man. I think his name was Vitalik. You might have heard of that character, but I saw him speak once, and he made a wonderful speech where he said, if you finish building a miner and you ship it to someone and it takes a week, you lose half the value of that miner. And from that point on, they would take the miners, finish them, and take them across the street and plug them in immediately. So I think it's going to be very hard to fight miner centralization, given that idea. Richard had a great idea. We need more fabricators in different places. We need more chip manufacturing, maybe in Iceland, other places like that. I don't know how to fight miner centralization, but I do agree with Richard that that is the core of the problem here. Things became far too centralized. And as we are towards the end of the show, I just want to say tonight we've got another Bitcoin meetup in San Francisco. If you're nearby, we're having a Bitcoin happy hour at Stukey's Club Moderne. It's on Bush Street, and that's later tonight. We have 151 RSVPs. If even half of them show, we'll fill the place. And I just wanted to show the QR code if you'd like to give us a few donations. This is the World Crypto Network. If everyone could give us a thumbs up and a share. Thank you so much for joining us in the chat. It's been really fun today. Hopefully we don't have to do this too often, but it's great to cover exciting breaking news like this, even when we had other things that we wanted to do. But if you just want to go ahead, Jimmy, give us to the end there. Maybe Richard could say a goodbye as well. Thank you so much.
Yeah, it was really nice to have an actual miner on the show. I guess the only step up from a good Bitfury guy would be a Chinese miner to see what their opinion is, because it would be very curious. I mean,
oh, just you wait, Richard. I'll help you out.
Nice. Thanks, Jimmy. I look forward to your show tonight. I think that's going to be a great one.
Thank you. All right.
Thank you, Thomas.
Thank you, Alex.
So, Thomas, you was absolutely right about the delivery and the example what the Vitalik was mentioned about the delivery and losing the profit if delivering or if delivery take a lot of the time. It's absolutely correct. And once again, talking about the centralization and decentralization, I think decentralization, it's just in natural way will happen quite soon. It's already starting, and that's normal. And then people are talking about that centralization and decentralization. It just like different phases. So centralization, it's also about the efficiency. If you have $1,000, you're never keeping them on 1,000 accounts because it will just be too expensive for you and not efficient to use them. Absolutely the same for miners. Even the biggest miners like a Bitmain, like a Bitfury, they are not keeping all the equipment in one single data centers. It's all distributed around the globe. And it's just presenting like one single pool. It's looking like one single pool, but there is thousands of users, thousands of investors who are buying the mining equipment, who are using the pool. They also investors, and they also representing the Bitcoin network. But it will happen naturally once again. So I think because they are reaching the highest point of all the optimization, all possible optimizations, the next phase, the decentralization of mining equipment, will happen naturally. And this is why the Bit3 is also making the mining containers. It's marine containers, and you can just buy it, install it everywhere. And this is our answer how it can be decentralized.
Good stuff, Alex. Thank you, everybody, for joining us. It's been, I think, about 2 hours since we began. So I'm kind of amazed that so many people stuck with us. So thank you very much. And bye-bye.